Hey guys, welcome back to the channel. This is Sergio. I thought I would make a quick video on 5 ways to invest your tax refund. I just made a video on 5 ways not on five things not to buy with your income tax refund. This is the opposite. This is 5 smart ways to invest your tax refund. So let's get started. So they're not in any particular order. I'm just gonna give you the five things I would do with a refund. So number one, invest in yourself. So what do I mean by investing in yourself? Many times we want to invest in something else, and we forget about ourselves. So one good way that you can invest in yourself is to take a course. For example, like something that's new, like drop shipping. Well, not new anymore, but like drop shipping. If you want to know and learn about drop shipping, you can take a course. Maybe pay $300, $1,000, and take a course, an online course, and you can learn to do that business, how that business works. You can enroll in a vocational school, learn a trade, maybe learn how to become an electrician, get your CDO to become a truck driver, a plumber, etc. And the last thing you can do by investing in yourself is to repair your credit if you don't have if you have a bad credit, or start your credits by applying. Maybe if you don't have any credit, maybe you can start with a secured card. You can open it with $300, $500 in your local bank and get started with your credits. So by doing this, by investing in yourself, you're gonna open more doors in the future, and you're gonna be worth a lot more. So the second thing I would do is invest in a retirement account. So many times we want the pleasure now, and we don't want to wait for the future, which is called another word for it is delayed gratification. There was a study that they put I don't know how many children in a lab. Let's say 100 children in a lab, and they told the children, here's one lollipop, and no, that's not the way it goes. They asked the children, there's 2 lollipops. I can give you one right now, or I forgot how it goes. I'm sorry, guys. Give me a few seconds to remember. Get one now, or 2. Okay, this is the way it goes. So they asked the children, we can either give you, we have 2 lollipops. We can either give you 1 lollipop now, and that's it, or if you wait 5 minutes, we'll give you 2 lollipops. And to our surprise, about 90% of the children got the lollipop that minute, and couldn't wait the 5 minutes for the second lollipop. So what this means is everybody wants the pleasure now. They don't want to wait for the gratification for the future. So it's a good thing to invest in a retirement account, a Roth IRA, independent retirement account. If you get $5,000, $10,000, you can invest it there, and forget about it, and it will eventually grow. If you're 20 years old, by the time you're 60, with a compound interest, you'll have a small fortune there. The third thing I would do is, if you don't want to, if you don't want to invest it in a retirement account for the future, you can also buy gold or silver. With $5,000 or $10,000, you can get a good amount of gold or silver. Now the problem with gold and silver is you don't get a. It is an investment. It is an asset, but it's an asset that doesn't produce passive income. Now, what's passive income? Passive income is income produced. It's future income produced without you having to work for it anymore. For example, a rental property, you buy it once, and it's gonna be producing rent every month after. If you make a YouTube video, you're gonna make the effort once, but it's gonna be producing for you in the future. The same with a book. You write it once, it's gonna be producing in the future. So with gold or silver, it may go up in value, but it's not giving you dividends or rental income until you sell it. But it's still an asset. It's still a good investment. Why? Because gold and silver tend to go up in value with time. So it would be a much better investment than burning it in the 5 other things that I mentioned in my previous video. So the fourth thing I would do, another idea that I would do with the money, if you don't like the previous 3, is start a business. So with $5,000 or $10,000 or $2,000 or $3,000, any amount that you get back, you can easily start a business. With that money, you can buy equipment to start cleaning offices, commercial office cleaning. You can buy a pressure washer and trailer to start a pressure washer service. You can buy a van and convert it to a ice cream shaved ice vendor. Here locally, this is a business that I've been trying to get my hands into. There's people that own, like, let's say 10 trucks, and they rent them to other people for between $50 and $75 per day. So it's a very good investment, because let's say you have a $5,000 truck equipped with the music box and everything, except for the inventory. You rent it to somebody, they put their own merchandise to sell, and they give you each day $50 to $75 per day, and maybe they'll make $500 a day, and they give you $75. So it's a very good investment. It's a very good sort of passive income, because you're not gonna be doing any work except for maybe the occasional maintenance and repairs, but it's a good income. Also, you can start a business, maybe a barber shop. My brother's a barber. We're looking into maybe partnering and investing in a barber shop. It's an easy business. You just rent a location and get the permits and hire some barbers, and you pay them commission, maybe 60% commission, 65% commission. So they're basically contract workers. So the employees don't cost you. The employees will make you. The contractors will actually make you money, because if there's no service and they're just sitting down, you're not paying them. So it's also a lucrative business. So you can start thinking of ideas on what businesses you can start with the income tax return. The fifth way I you can invest your money and this is my favorite, is putting a down payment on a house. So after you fix your credit and you're in good standing, you can give a down payment for first-time home buyers, which is the FHA loans. It's a 3.5% down payment. So in Laredo, maybe the typical house is around $100,000 to $200,000. So the down payment will be between $3,500 and $7,000, and so it's very affordable with an income tax return to purchase a house if you don't have one, or a rental property if you already own a house. So and if you don't have any credits and you don't want to wait to purchase a property, like I did, I didn't have any credit when I started, and I wanted to buy a property already. You can also take the owner finance route, but you will end up paying a higher interest rate. Or you can assume a loan. You can take over payments on a property. That's another option, and you can still become a homeowner without any credit. But my recommendation, if you want to build a portfolio of properties of real estate, is to start with the right foot and fix your credit first, get a strong credit, and then purchase your first property. So these are 5 smart ways to invest. So I'm just gonna to summarize. I'm just gonna repeat them for closure. So the first one was invest in yourself. Second one, invest in a retirement account. Third one, buy gold or silver. Fourth one, start a business. And fifth one, give a down payment on a house. So don't burn your income tax return. If you have any questions, any comments, drop them in the comment section below. If you can help with giving me a like, it helps with the YouTube algorithm. And if you haven't subscribed, please feel free to subscribe. Thanks a lot, guys. Peace.